So my good learners, welcome back again to this session. That is financial reporting analysis. And today we are going to look at the accounting for cooperative societies. Remember, a cooperative society is an example of the circles we have in Kenya. And you must know how to account and how to present their what? Their financial reporting. So write for me the cooperative society, accounting for cooperative, accounting for cooperative societies. Cooperative societies. We are looking at how to account for cooperative society. So you say we can start by giving a definition and say cooperative societies are financial institutions. Say cooperative society are what? Financial institution. Are financial institution. Financial institutions which deal with saving, which deals with saving and credit facilities, which deals with saving and credit facilities to the what? To the members. So they give a credit facilities to the what? To the members. So we can give another note, say Cooperative Societies Act requires that Cooperative Societies Act requires that they prepare a set of final account, which should include number one, income statement. Number two, statement of financial position, or we can start with appropriation account. And number three is the statement of financial position. So these are the three statements which the Cooperative Act needs the cooperative societies to have their books of account. So we can start with the income statement. We look at the format of income statement of cooperative societies. Is my duster. Got it? So we can have the format of income statement. Remember, the income statement is prepared to show the financial part, the performance of the company, whether that company is making profit or making losses. That is the purpose of the income statement. So we will have like we can say the mini circle, income statement for the year ended So you give for the year ended. We start with the incomes. So the incomes for cooperative societies is the interest on members' loan. We will have the interest on members' loan. We put it here. And that also will have the investment income. So maybe they are with their saving, they invest this fund in other investments. So we have the investment income. So any income which you are generating from that investment, you need to account. And then we have the entrance member or the subscription fee. Entrance fee. What else can we account as an income and other incomes which is not specified? So that at the end of the day, you will have your total income. Then we less expenses. Go to expenses. We have audit fee as usual. Audit fee. We have committee allowance. So there are so many. Committee allowance, staff expense, members education, and other expenses. So that we subtract and get the net profit. Subtract and get the net profit. That is the simplest income statement. That is the net profit for the year. So this one is the net profit. This one is the net profit. So once you have the net profit, then we go to the appropriation account. So have it here, appropriation account. We can't have appropriation account. So from the profit we are generating here is the one that we are appropriating. So we will have the net profit for the year. Net profit for the year, which we have generated here. Then we less the interest on members, less interest on a members' deposit. If members deposit some amount and they earn interest, remember those interests are their incomes, not the company or the cooperative income. So we less that one, and then we less again dividend paid to members. Less dividend paid to members. Less dividend paid to members. Once you have less the dividend paid to members, we less again, we get now also the proposed. So we have dividend paid and the proposed, so it is the same. Once you have that one, you get now the retained profit for the year. You get retained profit for the year. Retained profit for the year. Once you have the retained profit for the year, we add the one brought forward, add retained profit or earning brought forward, so that we get the retained earning. Carry forward, so that we get the retained earning carry forward. So this is the format for income statement, appropriation account, and now we can look at the income statement. The statement of financial position. Statement of financial position. So as usual, we start with assets. So we have the email .com SFP. So as usual, we start with assets. So we will arrange our asset in form of liquidity form. When we say in form of liquidity form, is that we start from those assets which is more liquid or which we can convert easily into cash. So like cash in hand and cash at bank. So we start with cash in hand and cash at bank, cash in hand and cash at bank. And have deposit in Cusco. Deposit in Cusco. Receivable. Receivable. What else? Inventory. Inventory. Prepayment. Prepayment. Deposit in other cooperative society. Deposit in other cooperative deposit in other cooperative society. We continue here. Get intangible asset and members loan. And now we have the PPE. Have the PPE so that you have your total assets. Then we go to equity. Equity and liabilities. We have ordinary shares. Ordinary shares. We have share premium, retained earnings, statutory reserve, and other reserve. So those are very easy. What we have to know is the liability part. Excuse. Liabilities. Liabilities, we have payable. We have payable. We have members deposit. Members deposit accruals. Accruals. Accruals and bank loans and other liabilities. So that you have your total liabilities and capital. So having the format of the cooperative societies, you can now look at the quotient. We can now look at the quotient. We can now look at the quotient. Now look at the quotient. The quotient is very big. The quotient is very big, but we'll try. Which one we have? December 2010. Let me see if we have in a past paper. December 2010. My last paper is December 2011. So the question is December 2010. The question is December 2010. The question is December 2010. And the examiner, they like to test this old question, that 2010. That is the question number 3. Question number 3. So we have the ordinary share capital. We have the ordinary share capital, members deposit, account payable, interest on members deposit, furniture and fitting. We have motor vehicle, members loan, printing and stationery committee allowance, members education, AGM expenses, traveling expenses, kuna committee staff, staff welfare cost, dividend pay, account receivable, bad debt return of dividend income, members entry fee, deposit with other Cusco, deposit with cooperative bank, bank loan, deposit with PFB. We have land intangible assets. Additional information number 1, allowance for audit fee of 12,000. We have allowance for audit fee for 12,000. Depreciation is to be provided on the book value of the asset as shown below. Number 2, depreciation is to be provided in the book value. So I think I can start reading all of them so that you capture the figures. So under the trial balance, we have ordinary share capital. On credit side, we have 200,000, and we have members deposit on credit side, 180,000. We have account payable on credit side, 20,000. We have interest on members deposit on credit again, 270,000. We have furniture and fitting on debit side, 170,000. Motor vehicle debit, 150,000. Members loans, 250,000 on debit. Printing and stationery, 15,000 on debit. Committee allowance, 18,000 on debit. Members education, 17,000 on debit. AGM expense, 20,000 on debit. Traveling expense, you put some item committee, 22,000. Staff, 8,000. So total inakuja 30,000. And staff welfare cost, 30,000. Dividend pay, 16,000. Account receivable, 14,000. Bad debt written off on debit side, 10,000. Dividend income credit, 35,000. Members entrance fee credit, 90,000. Deposit with Cusco debit, 40,000. Deposit with Cooperative Bank debit, 15,000. Bank loan, it is on credit side, 48,000. Deposit with KFCB, 18,000 debit. And land, 17,000 debit. Intangible asset, 13,000 debit. Additional information number 1, allowance for audit fee of 12,000. Number 2, depreciation is to be provided on the book value of the asset as shown below. Furniture and fitting, 25%. Motor vehicle, 10%. Number 2, an allowance for doubtful debt of 5% is to be made on the outstanding receivable. Number 4, during the year, a resolution was passed to pay a dividend of 20% of the ordinary share capital of the members, that is the proposed dividend. Number 5, additional allowance is to be made for committee honoraria of 1.2 M or 1,200,000 required. The income statement for the year ended at 1st December, appropriation account, and the statement of financial position. So we will do working as a Can we start with working first or we do the question? Let's have a small working here. We have working. We can start getting the depreciation. We have been told depreciation, number one, fitting, furniture and fitting, they are charging 25% on cost since they say it is a straight line. The cost of furniture and fitting is 17,000. Nikata zeros. You have just removed the other 3 zeros. So when I check that 17, 35, 35,000 times 17, getting 4250, 4250, equal 170,000. So this one, we have another zero. And then the depreciation for motor vehicle. Depreciation for motor vehicle, they are charging 10% of the cost. Again, the cost of motor vehicle is 150,000. So how much is 10% of 150,000? That is 15,000. 15,000. Debt allowance for doubtful debt, we check whether it is an increase or an expense. When you say an increase is an expense, a decrease of allowance for doubtful debt is an income. So the provision is 5% of the receivable. How much is our receivable? Our receivable is 14,000. How much of 5% of 14,000? That is 700. You check in trial balance whether they have that allowance for doubtful debt. So if they don't have, it means we are increasing from 0 to 700. So this one is an expense. That one is an expense. You go to propose dividend, 20% of the ordinary shares. How much is the ordinary shares we have? That is 200,000. That is 40% of that one you get. So that one is very easy. Now we can go straight away and have the income statement of Ujusi Sacco. This company is called Ujusi Cooperative. Ujusi Cooperative Sacco. Say Ujusi Cooperative Sacco. Ujusi Cooperative Sacco. You can have incomes. We have incomes. Look at the trial balance. We have dividend income. Dividend income of how much? That 5,000. We have entrance fee. Entrance fee 90,000. We have, what else do we have? Entrance fee, bank loan. Dividend. I'm looking at trial balance if I have any other income. Interest on members. Do you have the interest on members? Interest on members? Yes. Interest on members deposit. Not deposit, interest on members loan. Change that one to interest on members loan on trial balance. So they're giving us a profit of 270,000. If you add, how much is the gross profit? How much is our gross profit? Or the total income? So 35 plus 90 plus 270, getting 395. That is the total income. Then we have expenses. Expenses, you can start with depreciation. You can add the two. It was 15,000 plus the one for furniture and fitting, 4,2,500. 15,000 plus 4 to 500, getting a 575. That is depreciation. We have number one, the audit fee. We are given an audit provision, so they have not paid. Remember to charge it as a liability of 12,000. Then we have committee allowance. If you check for honoraria, committee honoraria ametuambia nini? Committee honoraria, or let's finish with the allowance for doubtful debt we have computed. So we can finish with the additional information. Depreciation we have adjusted depreciation. Audit fee we have adjusted audit fee. Number 3, allowance for doubtful debt is 5% to be made on outstanding receivable. So that is an expense. We can put that one. Let's finish with the additional information. So we have increase in allowance of doubtful debt 700. Number 4, it is a dividend. Number 5, an additional one is to be made for committee honoraria. We have a committee honoraria. We have committee honoraria on our trial balance. We can add that committee allowance. It is the same. So you can add now 18,000 plus 12,000 is 12,000. So 18 plus 12,000 giving us 30,000. Giving us 30,000. So having finished the additional information, we can go back to the trial balance from the start ordinary share. That is not an expense. Deposit, account payable, interest in the account, furniture and fitting is only asset, motor vehicle is an asset, loan, printing and stationery. Printing is an expense, printing and stationery. Printing and stationery of how much? 15,000. 15,000 guys, 15,000. Then we have committee allowance we have adjusted. Members education. Members education Triangapi. We have 17,000. What else? AGM expense. AGM, annual general meeting. AGM expense of 20,000. AGM of 20,000. Traveling expense. We can't combine the traveling expense. It is 30,000. Traveling expense. Staff welfare. Staff welfare. 30,000. We have dividend pay. That is not an expense. Account receivable. Bad debt written off. Bad debt. 10,000. Bad debt 10,000. Dividend income, dividend deposit, bank loan. I think up to that point we have exhausted expenses unless there is any other expenses. So if you get the total for those expenses, how much is it? 57,500 plus 12,000 plus 700 plus 30,000 plus 10,000 plus 18,000 plus 20,000, 30,000 40,000 again. Plus 10,000. I'm getting 222, 222, a lot of 222. 22, 2200. That is the total expenses. That is the total expenses. So we less from the profit so that we can get the total income so that we can get the net income. So our net income is how much? So I take 365, 5,000 minus the answer. Having a net income of 17,800. 15,000, 17,800. That is the net income. That is the net income. Now we can do appropriation account. Let's do appropriation account. We appropriate this net income. We appropriate that net income. Appropriate that net income. So we have the net income. 17. He said we less the dividend paid and propose less dividend paid. Gonna propose dividend. Propose dividend. So how much dividend did we pay? Look at the trial balance. Look at the trial balance. They said a dividend pay of 16,000. Dividend pay of 16,000. And then there is a proposed one. Additional information number 4. During the year, a resolution was passed to pay a dividend of 20% of the ordinary share capital of the members. So the proposed is 20% of the ordinary shares, the value that is 200,000. So 20% of 200,000. 20% of 200,000. Getting 40,000. Getting 40,000. So what else do we less from the application? Do we have any position here? Interest on members' deposit, we don't have. So those aren't is cash. We can get now the net income 172,800. 172,800. 172,800. I less 16,000. I less 40,000. Remaining with 11,6,800. 11,6,800. That is the retained profit for the year. This one is what is called retained profit for the year. Retained profit for the year. That is the retained profit for the year. Then we can now have the income, the statement of financial position. So have this profit here so that we don't forget. So that we don't forget that. That we don't forget our profit, our net income, our net income. So we start with assets. So assets, we have deposit in Cooperative Bank. So this one is just listing deposit Cooperative Bank, 10,000. What else do we have? Deposit in KFC. 18,000. What else do we have? Deposit in Cusco. How much? 40,000. deposit in Cusco receivable. Receivable. Remember when you have been given allowance for doubtful debt, under additional information, remember to reduce your receivable. So it is an expense, so you will not recover that amount. It is a bad debt provision. So you take the receivable, 14,000 minus 700. How much are we remaining? 14,000 minus 700 remains with 13,300. 13,300. Look at the additional trial balance. What else do we have? Members loan. Members loan, 250,000. We have intangible asset. Intangible assets. How much? 13,000. 13,000. Now, furniture and fitting. Now we have furniture and fitting. Furniture and fitting. What was the cost of this furniture and fitting? That is 170,000. Remember to adjust depreciation of 42,500 so that we remain with the net book value. That we remain with net book value of 127,500. What else? We add motor vehicle. The cost of motor vehicle is 150,000 less depreciation of. Is it 150,000 or it was 15,000? Sorry. 15,000, so 150,000 minus 15,000 we remain with 135. You can add for me and get the total asset. We have equity and liability. Have ordinary shares. Ordinary shares. Ordinary shares, how much? 200,000. 200,000. 200,000. 200,000. What else do we have? The retained earning. Remember our retained earning. Get to be part this one 11,688. Can go to the liabilities and current liability. Current liability, bank loan. Bank loan is a liability. Bank loan show balance on credit with 8,000. With 8,000, whatever we are, current liability. Current liability. Payable, I will squeeze here. Payable ni ngapi? Payable ni 20,000. 20,000. We have accrued. Accruals, remember audit V, atukulipa. That was a provision. Proposed dividend. We have dividend proposed. We have honoraria. We have not paid. All those are provision. So audit fee 12,000. Audit fee 12,000. Proposed dividend 40,000. Not paid. And the honoraria is 12,000 again. 12,000 again. Then we have the members deposit. Members deposit is not our money. It is money for members. It's not our money. So get the total. Get the total. 15 plus 18 plus 40 plus 13.3 plus 250 plus 30 plus 112 plus 45, getting 60. So you can balance that one now. So balancing off is not a challenge. So you add the total asset, add all this, get the equity, total equity and liability. You compare with total asset. If it's not balancing, then check for if there's any misstatement which you have left. We didn't include land here. We have a land for trial balance. Look at the trial balance. You want to learn trial balance, yeah? Want to learn? Yes, there was a land for 17,000. We have land here for 17,000. 17,000. So if you add 611.8, answer 611.8 plus 17, getting so this one will come to 62800. So that one should be the total here. So confirm if I'm right or wrong. So we confirm. That makes the end of this topic, that's the cooperative society. So the best thing to know in cooperative society is just simple. You have the income statement, income and expense. So the thing you need to remember is the appropriation account, where you take the net income, you less the proposed dividend and the dividend paid. Then from that, the net you get the retained profit. That retained profit is the one that you take to the statement of financial position. So there is no even how to grab the format here or anything. This is the simplest big question. So pray God that the examiner will touch this question. It is a free marks, guys. So get for free marks. Enjoy yourself with free marks. So let the hardest question leave that one to the what examiner. So financial reporting, the best way to pass this paper is to have the format. Once you have the format and this small concept like allowance for doubtful debt, depreciation, automatically will get 3 marks, 1 marks, 1 marks, 1 mark. So in each question, if you get at least 7 questions, there is no reason you can say you have failed. That is an automatic pass. So keep watching, keep sharing, and if you have not registered for any other classes, videos, we have the videos. So make sure you register the videos. Thank you, guys.